Welcome to Alpha Recap. Thanks for joining us. Today we're wrapping up market action from May 22nd, and we packed a lot into this one. Big project financing, policy hotspots, and a bit of a sector split. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. May 22nd felt like a two-track market day. Capital flowing into tangible projects on one side, and regulatory headlines stirring volatility on the other.
Totally. Let's start with the day's winners. Materials, utilities, and energy showed the clearest upside momentum. Matt, what drove that?
A few concrete items. Literally, concrete and steel. There was about a $2.9 billion export credit loan that hit headlines. Plus, Arafura made a final investment decision on their Nolan's rare earth project. Those sorts of FID moves tend to cut execution risk.
Right, and on the utility side, we kept hearing about capacity additions. 75 gigawatts for the summer was a number that kept popping up.
75 gigawatts was big. That's a mix of distributed and utility-scale solar plus storage. And corporate power purchase deals were supporting it. When you get firm offtakes and big capacity announcements, investors viewed that as translating into longer duration contracts and clearer cash flows for developers and regulated utilities.
So what really stands out here is that when projects reach FID, or lock-in financing, the market rewarded the whole supply chain: miners, equipment makers, contractors.
Exactly. You get demand visibility for materials, for heavy equipment, for EPC contractors. It's a cascade. Export credit backing reduces the funding tail risk, which reduces the premium on firms that supply the project.
Energy had a good day too. Inventories tightened, and there were easing tensions near the Strait of Hormuz, right?
Yes, oil inventories ticked down and diplomatic noise eased, so oil prices moved up a bit. That, coupled with deal activity in the North Sea and residential storage plus solar projects, gave the broader energy complex a lift. And the reason these sectors outperformed was straightforward. Visible capital converts lower execution risk, and when supply tightness shows up in oil, it pulls flows into commodity-sensitive names.
Okay, flip side. Policy-sensitive groups were the other headline. Crypto, cannabis, and parts of financials were under pressure.
Yeah, that tracks. Regulatory friction was front and center. The SEC paused a proposed innovation exemption for crypto products, Congress was asking questions, and there were reports of security concerns, including a possible quantum vulnerability. That kind of uncertainty drove near-term volatility.
And cannabis had mixed signals. Federal rescheduling chatter, but state-level pushback and testing lab freezes, correct?
Exactly. On paper, rescheduling looks constructive, but practical de-risking wasn't achieved because state-level vetoes and licensing freezes kept revenue pathways uncertain. When policy outcomes are binary and local, you get headline-driven moves rather than fundamental re-ratings.
Finance had its own drama. Morgan Stanley scrutiny and a big settlement out of Goldman. Tell us about that settlement number.
Goldman's settlement was about $500 million, tied to the one MDB matter. Those visible cash outflows matter because they change capital allocation and increase oversight. When banks faced that level of enforcement activity, analysts started to flag elevated compliance costs and potential constraints on buybacks or dividends.
Short reactions. Right. Yeah, that tracks.
Those short-term legal developments frequently overshadow fundamentals in the sector because the timeline for clarity is long and outcomes are binary.
Let's step back and connect the dots across sectors. You mentioned cross-cutting themes earlier. Walk us through the big ones.
Sure. First, project finance credibility lifts capital goods chains. When you see a large export credit loan and an FID, that tends to increase demand for mining, processing, and heavy equipment. Second, chip and AI funding acted as a multiplier. CHIPS Act support plus corporate AI pilots pushed CapEx across data centers and factories.
We heard about a CHIPS push of about $2 billion and a $300 million manufacturing funding round, right?
Right. Those are the kinds of allocations that ripple into semiconductor equipment makers and industrial automation suppliers.
Third theme?
Policy and regulation stayed primary risk drivers in crypto, cannabis, and some financials. When legal timelines dominate, prices move more with headlines than with earnings. Fourth, Energy supply risk fed through to inflation and materials costs. Strait of Hormuz disruptions pushed short-term oil risk up, which can increase transportation and fabrication costs across the value chain.
And lastly, retail dynamics. Walmart's Sparky AI and Kroger's price cuts were interesting contrast points.
Walmart reported an increase in average order value tied to its Sparky AI agents, which is a neat example of AI lifting retail economics. Kroger, meanwhile, cut prices to defend share. Those tactical differences show how scale and analytics can give big players an edge over smaller retailers exposed to tariffs.
Quick pause. The number that really stood out to me was the 75 gigawatts of incremental capacity. That's not small.
No, it isn't. To put it simply, more capacity means lower grid stress in summer, clearer contract backlogs for utilities and storage developers, and the path to longer-term revenue recognition for those projects.
Let's pivot to the most significant single moves. What were the day's headline movers and the broader why behind them?
Top of the list was the about $2.9 billion export credit loan and Arafura's Nolan's FID that reduced execution risk for battery supply chains. Utilities' 75 gigawatts was next, then Goldman's $500 million settlement and elevated scrutiny on Morgan Stanley were big finance stories. The SEC pause on a crypto innovation exemption and congressional probes were major for crypto. Novo Nordisk getting EU approval for Wegovy re-accelerated GLP-1 rollout expectations. And on consumer, Walmart's AI lift versus Kroger's price defense was noteworthy.
Interesting mix. Novo Nordisk's approval was a healthcare headline that had cross-sector implications, right?
Yes, EU approval for Wegovy made the GLP-1 rollout more global, which changed expectations for primary care demand, weight management clinics, and payer negotiations. That can reshape revenue expectations for companies across delivery systems and related therapeutics. Honestly, I was a bit surprised by how quickly that showed up as a market theme.
Short reaction. Hold on, say that again?
I was just saying the approval accelerates adoption, which then pressures other parts of the healthcare chain. It's more than one company's story.
Okay, let's move into practical frames, the actionable investor insights you mentioned. But first, a quick reminder for listeners. Everything we're discussing is informational and not investment advice.
Good reminder. From an informational perspective, first, prioritize visibility of contracted cash flow in project-heavy sectors. Look for FID-complete projects, bankable offtake agreements, or export credit backing. Those reduced downside from financing shocks.
Second,
Treat regulatory timelines as liquidity and volatility drivers in policy-sensitive sectors. Keep an eye on court dates, congressional calendars, and SEC rulemaking windows.
right. Crypto and cannabis were perfect examples of that yesterday.
Third, use AI and chip capex signals as early indicators for multi-sector cyclicality. Watch CHIPS Act allocations, large data center financings like the $575 million deal that got flagged, and corporate AI pilots.
Fourth,
Monitor commodity and power price transmission, oil inventories, Strait of Hormuz developments, and local power prices are inputs that feed through to industrial margins and consumer prices.
fifth was balance sheet resilience in banks, right?
Yes, after big settlements, analysts look at legal reserves and capital ratios. $500 million changes the math on payout capacity and can increase regulatory scrutiny.
And for retail exposure, segmentation mattered.
Right. Retailers that can deploy AI to lift average order value and conversion will look structurally different from smaller, tariff-exposed peers.
Short reactions? Right.
Looking forward, the risks to watch included regulatory calendars, SEC rulemaking, congressional hearings, and state votes on cannabis, plus macro moves from the ECB and U.S. prints that could shift rate expectations and bank stress tests.
Energy choke points remained a key sensitivity too. Weekly inventory prints and shipping lane developments out of the Strait of Hormuz could swing prices.
And finally, execution risk on large projects. Even with FID and export credit backing, construction delays and supply chain constraints in solar and batteries can create lumpy cash flows.
Before we wrap, let's do a quick sector-by-sector speed round. Utilities?
Watch contract structures and regulatory filings tied to the 75 gigawatts. Grid operators' summer forecasts and state rate cases will matter.
Materials and mining?
Track project milestones on Nolan's and battery recycling plants in the disbursement timeline for that export credit loan to validate production ramps.
Energy?
Monitor weekly oil inventories, Strait of Hormuz developments, and residential storage adoption trends.
Finance?
Keep an eye on enforcement headlines and reserve changes. Those can quickly change capital allocation plans.
Crypto?
Regulatory clarity, or lack of it, was driving prices more than on-chain metrics in the near term.
Healthcare?
GLP-1 rollouts after Wegovy's approval in the EU will be multi-quarter themes, and payer responses will matter a lot.
Technology and communications?
Product launches and AI deployments could drive revenue beats, but regulatory actions around data and tokenization were meaningful headwinds.
Cannabis and consumer?
Cannabis was highly state-specific. A single vote could be binary for a local revenue stream. Consumer. AI and price strategies were reshaping share dynamics.
All right, wrapping up. Matt, best way to summarize May 22nd in a sentence? Key takeaways for listeners? 1. Favor clarity of contracted cash flows in project-heavy trades. 2. Treat regulatory timelines as volatility drivers. And 3. Watch AI and chip capex signals for broader cyclicality.
And remember, these are informational frames. Analysts note and data suggest trends, but this wasn't personalized investment advice.
Exactly. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll keep watching regulatory calendars and project milestones, and we'll bring you the highlights from the next market session.
Thanks, Matt. That's it for today's Alpha Recap. Markets closed after a day of clear winners and clear risks. See you next time, and remember you can always ask questions at stockalpha.ai.